All right, Ken Orange Steer Trader with the tight daily range CRT setup, no bias required. So let's get into it and talk about it. So this is the daily sweep. I have gone over this before, but just with wanted to update the video just so people know it's something that they can also look out for. So instead of candle 1, 2, and 3, you're simply looking for a daily sweep, which in this case would be like a candle 1 and then a candle 2 and 3 all in one together based on daily ranges. So this is how you would do that. You identify, this is how the finished product should look if you're on the right side of the trade. So you just identify a small candle body on the daily chart and you look for price to go above the prior day high and then close back inside of it, or prior day low, close back inside of that. This is a short example right here. Okay, so this would be like a daily chart, and we'll drop down to the lower time frames to show you how it would look. Now, the goal for this is this: you don't trade every single day, right? You're only looking for those days that have a small candle body like this right here. This body for the prior day needs to be 20 pips or less. The best candles to see are single digits, 1 to 9 pips. Okay, that's your watch list. If it's above 20, even if they work out, I don't care. That way you just filter out some of the pairs that may or may not work out. Okay, we're not trying to catch every single move every single day. That's going to tire you out. Raise your standard. Okay, 20 pip bodies or less. Okay, all right. So here's the checklist, because this is very simple. A 2-year-old could trade this, all right? So all you do first is you identify the days that have the tiny candle bodies. The smaller, the better. You don't need a daily bias for the next day. You don't care, okay? What you're going to do then is just wait for price to either sweep or close inside the prior day high or low, whichever happens first, and you just take the opposite side of the trade. Ideally, your take profit is to the other side of the range, but sometimes it can break out. And you're going to take your trades on a 1-hour chart, okay? So you just wait for price to either sweep or close inside the prior day high or low. So it's a false breakout is what I'm saying, just to put it simply. And this is nothing new. The main thing that most people don't talk about is the fact that you want to focus on ranges that have small candle bodies. And your take profit is going to be the other side of the ranges high or low. So let's take a look at that. So this is a daily chart for CAD Swiss, right? So this candle body right here was 9 pips. Okay, daily chart, 9 pips right here. For 24 hours, it only moved from the open to the close 9 pips. So because of that tight compacted price action, we want to see an expansion for the next day, whether it's up or down. We don't know, right? So this is the 1-hour chart. Now this trade happened very early in the day, but it did give you 2 chances to get in. Now the market levels indicator will automatically show you the prior day low and prior day high. So we see right here where my mouse is, prior day low, price closed outside of it and then closed back inside of it. That right there is your entry. You don't need any fair value gaps. You don't need to drop down to the 5-minute, the one. No. All you need for price to do is close outside and then close back inside, because let's look at our finished product. Price closed outside, shorts were fooled, and everybody who went short, thinking price was going to break out to the downside, got destroyed. Okay, so you're taking the opposite side of the trade. That's the goal here. Once this close happens back inside the prior day's low, all that would have been yours. So you had 2 chances, one at 7 p.m. Eastern Standard Time. And I mean, you could have got in anywhere in this kind of consolidations here, but the best one would have been at 4 a.m., close to this fair value gap, okay, and daily open. And then price just did a straight rise. Easy, right? So again, it's just in 3 steps. Wait for the break, wait for the close back inside. That's it. You don't need any indicators for this. All you're looking at is price action on the 1-hour chart. That's it. Okay, please don't overcomplicate this. So we have Euro New Zealand here, and sometimes this is a rare instance, but you will see where price may offer you 2 opportunities to trade the range both ways. So in this case, if you would have taken this sweep of the prior day high right here, where this green candle swept the prior day high, closed inside of it, if you'd have took this short and your take profit was to the other side of the range right here, you would have been out in 1 hour, done. But if you missed that trade, no worries, because what did price do? This is the prior day low. Price closed outside of it, and then what did it do? Closed back inside of it. Okay, anybody who kept trying to short here was shorting against this move. They would have lost. Okay, so that's why I say price won't always break out of the range. So you had 2 chances. You could have got in on this sweep, enter there, or this traditional setup where price breaks below, false breakout below to the prior day low, and then closes back inside of it at 3 a.m. London session. All that would have been yours as well. Not a huge move, but at the end of the day, that would have been yours. Okay, so either one of those would have been fine. And it closed right back pretty much where it started in the daily open, because as you can see, by the time the price closes, you had another tiny range right here. So, but this was an 11 pip body. So that's where it starts though. How big is the body of the candle? And you just wait to see which price gets swept, which side of the range gets swept first. That's it. Okay. So that was Euro, or Aussie, New Zealand. Next up, we have pound yen. So this candlestick body right here for the daily chart was 13 pips. And we all know pound yen has a tremendously large ATR. So then it's just the waiting game to see, okay, which side of the range is going to get swept first. So as you can see here, this is the daily open. Nothing's happening. When you start to see price move with momentum outside the range, that's what you like to see. So when you see that, you can set a price alert for this. If you want to set price alerts for your prior day high and low, and then when it goes off, you know, okay, I need to watch. But you can't trade until price closes back inside. Okay, so the best entry here would have been at 5 a.m. This one did have a strong move to the downside here before it kept going. So you want to be cognizant of that as well. But it did hit the other side of the range, so that's the price action that you're still looking for right there. So as long as the low of the day holds, don't be freaked out by these types of price moves, okay? So yeah, but that worked out perfectly. So that was a long example. So this right here was dollar CAD. This is a 9 pip body. So again, we just mark it and then we see, okay, which side of the range is going to get have a false breakout first, the higher or the low. So we just wait, all right? So in this case, price opened, closed above the high right here, and then closed back inside of it right here. So at 11 a.m. on this candle's open, our entry is short. So you can place your stop loss above the high of the day. And if it happens later in the day, this was at 11 a.m. In this case, I'd say it'd be more realistic to expect a breakout. But if the move comes earlier in the day, maybe chances of a breakout may not be as high, but it just depends. Okay, it just depends. You never know. All right. So in conclusion, obviously, if you want more chart examples, back test it for yourself because there's nothing stopping you from doing the exact same thing I did. Right. But they're in there. Just go back through your charts and find them. But that's the whole thing right there. You can make this your bread and butter, trade these small daily ranges, and just be done. You don't even look, everything else is just risk management after that. But small ranges are rule number one. You need a small candle because a small candle can lead to a big move. The 1 hour chart is best for entries. I'm not, like I said, no 5 minutes, no none of that. Okay, so you just check the chart once on the hour, every hour. If you want to check it like 5 minutes before the candle closes, that's fine too. Okay, but you can just set price alerts at those levels, at the prior day high and prior day low of the candle ranges you identify. So you don't have to sit at the chart all day. This is perfect for people who may be working, got a lot going on. You just take the trade. You already know your stop loss and take profit needs to go. So why are you sitting and staring at a chart? It's just not necessary. Single digit candle bodies are best, okay? And don't touch anything over 20 pips. I don't care if it works out or not. That just puts the odds in your favor. Your only entry signal is when price closes back inside of your range. You don't need any indicators. You don't need any fair value gaps. You don't need any sweeps. You don't need anything, okay? You're following what price is doing. Price is doing something, and then you're just reacting to it. All right, that's it. Most entries are going to be during Asia and London. You will get a few though during New York, but most of what I found just happens earlier in the day, you know, around 8 p.m. Eastern Standard, 7 p.m. Eastern Standard, 5 a.m. Eastern Standard in there. All right. And risk management is always going to be key because any and every setup will fail. As great as all these examples are that I showed you, you're going to start trading this and you're going to lose some. It is what it is. That's trading. Welcome to the world of trading. If you can't take the losses, you shouldn't be a trader. Okay. But if you can, and you can keep your losses small, and maybe you want to scale into a couple of pairs, you definitely can. So in conclusion, one last thing too, when you trade this, if you see strong closes in your direction, there's nothing wrong with adding right here, maybe adding right here, another entry so you can maximize your gains. Adding right here on this hour close, adding right here. Now this one you still want to be smart because like I said, this one right here was definitely a stop out. Some people, I promise you, they got stopped out going long here, but then price kept going. So be smart with your scale ins if you want to trade this. But adding on the hour charts as well is good too. That would have been your first entry there. Maybe add another one right here and then, you know, ride it on up. For this one here, even for this entry right here at 4, could have got in there. Maybe add another one right here and then all that would have been yours. Okay, so at least 2 entries. Try to, you know, scale in a little bit, see what you can make happen. All right, so don't be afraid to do that. If it's working out and showing you that price is moving up, fair value gaps are really just going to be confirmation of what price has already done. Okay, now that fair value gaps though, like I said, I wouldn't use them as entry signals. This is your entry signal right here, the close back inside the prior day low or inside the prior day high. That's your entry signal right there. Okay, if it doesn't do that though, you're not trading, right? And then fair value gaps are saying that's your your confirmation say you're right today, enjoy the profits, and then get out when the daily candle closes. So I appreciate you watching. Thanks for your time and attention, and have a great rest of your day. Don't forget to like, subscribe, and take care.